Hi, this is PR Sundar. Welcome to Dalal Street. Post market report. What happened today? Yesterday it was the dream run, and after such a dream run, what is expected? Consolidation. And today Nifty was going 100 point higher, then came down more than 100 point, and finally I am checking here, the Nifty just closed only 1.25 point down, and Bank Nifty was hugely volatile. So Bank Nifty, I think from morning high, it has almost fallen 1000 point. And ICICI Bank, it went up to 580, then came down to 550, 680, right? Sorry. So it was such a big swing. ICICI Bank going to 680, just imagine, which is an all-time high. From there coming to 650 and again closing around 658. And Bank Nifty made such a huge volatile move, but finally it closed lower. And all because of the power of profit booking by domestic institutional investors. FIAs have bought at the end of the day 1144 crore, whereas domestic institutions have sold for 1559 crores. So DIIs have sold almost 400 crores more than what FIAs have bought. So it is in a way it's good. Markets are consolidating, not like 1500 point yesterday, another 1000 point today. That will be making option sellers' life very difficult. There is nothing much to talk today, so let me come back to our business straight away, where the smart money is playing. When it comes to Bank Nifty, 37,500, 38,000 call options, there was a huge addition in the open interest. And let me tell you, smart people, smart money is selling 37,000 straddle. So which means that in the next 2 days, and the smart money is not expecting more than 700 point up or down in Bank Nifty. However, these are only just a guidelines, and if it goes, and those people know how to manage their positions, either by going long in future or short in future, or by doing so many other ways. It comes to Nifty, 15,300, 15,400, 15,500, one huge addition in the open interest. But where is the smart money is deploying their funds? The smart people deploying the funds at 15,300 straddle, which is trading around 160 rupees. So that means these people are expecting only about 150 to 160 point up or down in the next 2 trading sessions. Well, nowadays the markets show surprises, both upside as well as downside, and therefore we will see how the markets pan out on the next 2 days, right? Now, over the weekend, I posted a video how to give Bharat bond as collateral, and there were many inquiries. And let me clarify a few things, and next week I will come out with a video. The title will be very, very interesting. What are the ways your broker can cheat you? And that will be my next video during the weekend. But right now, let me tell you, some people ask me, how can they buy Bharat bond? Just like a normal shares, you can buy from the secondary market. And what is the trading symbol? EBB ETF. Now, When you are pledging this with the broker, should you pay any interest? I know there are some brokers, they are charging interest. And they are saying only for intraday we can give limit, but if you want to carry positions, you have to pay interest. And let me tell you very, very clearly, you are not supposed to be paying any interest to the broker. So when you pledge the shares or when you pledge the mutual fund or when you pledge Bharat bond, your broker is not supposed to charge any interest from you. And another interesting thing, some people ask me, sir, can I pledge this and with the limit I am given, can I buy the shares from the equity market? Just think yourself a little bit. It is a hypothetical question. It's not possible. Let me tell you, cash market is the place where the seller is actually giving you the share. The buyer will have to pay the money. Futures and options is the place where the buyer is actually not buying the shares and the seller is also not actually giving you the share. It is just an agreement to sell and buy. Just an agreement on the paper. So that is why here both buyer and seller have to give the margin money to the exchange. The exchange says you don't have to pay the cash, you can pay through collateral. Right. So that trading limit based on the collateral what you get, that can be used only for the margin money. Assume that you can buy the shares. You buy the share, again pledge it, again get the limit, again buy the share, again pledge it, again buy the share. It can go on in infinity, right? So that is not possible. So if you pledge your shares or mutual funds or Bharat bond to the broker, when you get the trading limit, that trading limit can be used only to pay for the margin money to the exchange, which means that you can only sell options. You cannot even buy options, because buy option you have to pay the cash. Can you trade in futures? Yes. But when it comes to trading in futures, there are two things. One, margin money for taking future position. Second one is MTM loss. So margin money you can use the collateral. For MTM loss you have to pay cash. Whereas when it comes to option selling, margin money also you can pay, MTM also you can pay through the collateral. Because there is no day-to-day settlement of MTM losses in options. Only day-to-day settlement only in futures. And however, if you are booking the loss, at that point of time, the loss you have to pay by cash. So I hope I made it very clear, and next week I will come out with a video, what are the ways brokers can try to take money from you to caution you, so that you can be very, very careful. So I hope you enjoyed the video. Thank you for watching.